Yo, what's up, YouTube? Welcome back to the channel. Hope you guys are doing good. So in this video, I'm gonna be just backtesting a little bit of synthetic indices, right? So this is the new synthetic indices with Weltrade. So I'm gonna be diving into that and looking at to how it works and stuff like that. So I have tested it a couple of times. If you haven't watched the video where I was showing my withdrawals, trades I took, and the losses I took as well. If you haven't watched that, I'm gonna put the video here, and then you guys can go watch it. I'm gonna put the link also in the comment section so that you guys can go watch it. Other than that, let's jump into the video and break down some few threads and see and back tears as well. And I'm talking a lot. Let's just focus on the video. Okay, there we go. So one thing you need to understand that with every market that you are going to be trading, there's one thing that's very important, right? Which is market structure. If you don't understand market structure, you will not be able to identify trades within the market. So I will always emphasize that please, 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 please take a moment, go and learn market structure so that you can be able to identify these trends on the market. Because if you don't know that, then the chances of you blowing your account are going to be high, right? Especially with synthetic indices because they only work based on technicals only. So if you don't understand technicals like the work and stuff like that, this is not going to be the market for you. And also the other thing is that if you are someone that's used to signal, you are someone that's used to an indicator that's going to tell you when to buy, when to sell, with synthetic indices, it's going to be difficult to use those type of indicators, right? Obviously, signals, you can get it from someone, but I will always advise you to work on yourself so that you can be able to trade on your own, right? Other than that, let's get to the charts. All right, so as you guys can see that the market is pushing up, right? It's creating higher highs and higher low, higher highs and higher low, higher highs and higher low, right? As it continue pushing up. So this tells us that the market is in an uptrend, right? So now for you to, what you need to do is, the first thing that you need to do when you come to the market is, one, where is the market going, right? Direction, right? I'm gonna just put a D for direction. That's very important. The first thing that you need to do whenever you come to the market, make sure that you understand the direction of the market. Because if you don't understand that, then the chances of you blowing your account are high. So when we look at the direction, where is the market going? We can see that for the past 1, 2, 3, 4, for the past 4 days, the market is being in an uptrend, right? And then obviously starting from yesterday, the market then started breaking the lows, which now created a new low, and then it created a new high, lower high, and then it dropped, created a new low, a new lower high. So now we have a market that's pushing to the downside, creating new lows and new lower highs, right? So this gives us an opportunity to say, okay, cool, the market is going down. Then we need to start doing what? We need to start to know which trades to take. So one, and identify the direction. And then number two, once you've identified the direction of where the market is going, then you start deciding to, okay, cool, what am I going to do? If the market is going up, simple guys, you just look for buys. If the market is going down, simple guys, you're just looking for sells, right? But then if the market starts ranging, right, moving sideways, up and down, right, what do you need to do? Then you keep on buying the lows, sorry, buying the lows. So you buy the lows and then you sell the highs. So now that's going to be more of a support and the resistance type of trades that you're going to be taking, right? And obviously now when you are trading, the market, let me just quickly clear my chart again. So obviously, if you're going to be trading an uptrend, you are going to be looking at your supply zones, right? Sorry, your demand zones and your break and retest as well, right? Your demand zones to catch those trades as the market continue pushing up, right? As the market continue pushing up, right? You catch what? You look at those demand zones, right? But then if the market now is pushing to the downside, obviously now what you're going to be doing is you're going to be taking trades obviously on your supply and the break and retest zones, right? Because now it's giving you entries when the market is pushing to the downside, right? So that's what you're going to be looking into. One, you need to look at the direction of the market where it's going. Number two, once you identify the direction, then you need to know what you're going to be doing on the direction. If it's going up, obviously you are going to be looking for buys. If it's going down, obviously you're going to be looking for sells, right? And that's it. So those are going to be the two most key things that you as a trader you need to be able to understand. That's just the foundation of everything else. Before you even try to understand what type of candlestick you need to look into before you take a buy, what type of a candlestick you need to look into before you take a sell, the most key thing that you just need to look at is where is the market going? where is the market going and what do I need to do, right? So that's another thing that you need to do when it comes to synthetic indices under then market structure. And let me quickly break down for you guys what is market structure. But before I do that, I am doing a course which is going to be for free. If you would like to know how to trade synthetic indices, I'm going to put the link down below. Click on the link, hit me up on WhatsApp, and then I will get you sign up. I already have 5 people already joined. That means there's about 15 spots that's left. I'm only taking 20 people, and that's it. But then let's get into the video again. So now let me just clear my markup so that we can dive into this, right? And I just want to keep the video short as well so that you guys can understand what's going on. So there's 3 types of structures, right? Let me just quickly move my chart to the upside. There's 3 types of structures, right? We have one, right? We have an uptrend, which is the market is pushing to the upside, right? Let me just do this. And then we have a range, which the market is moving to the sideways, right? And then we have a downtrend, which is the market is moving to the downside, right? So there's 3 things that the market will do on a daily basis, right? No, there's 2 things that the market will do on a daily basis. It's going to go up and down, up and down, up and down. Even though the market is pushing to the upside for the whole week, for the whole month, for the whole year, there's one thing that price does. It push ups, down, up, down, up, down, up. As it continue doing that, it's giving you guys structure that you can work with, and then it allowing you guys to place yourself within an area where you will be able to take high probability setup if you do understand market structure and the direction in which the market is going, right? So now let's move on to the next one, range, right? What is a range? Obviously, a range is when the market is moving sideways, right? Not breaking the highs, not breaking the lows, just bouncing in between. So in this, just to put it in simple terms of Forex, we're gonna say this is what is support and resistance type of thing, right? So this will be your support area, this will be your resistance area. Synthetic indices do respect this thing so much, right? So make sure that if you do identify a support and a resistance, you play within that. You always buy at the support and always sell at your resistance. I speak so fast, guys, but then if you want to learn more, you can just put the video on a slow mo so that you can be able to understand this, right? So support and the resistance, always sell at the resistance, always buy the support, and that's it. You will look for confirmation before you can do that, which is very important, right? And thirdly, even the market though is moving on a ranging market for quite some time, there's only one thing that the market does, which is what? It moves up and down, which is what I mentioned. It will move up, down, up, down, up, down, up, down, up, down. It gets to the resistance, give us a confirmation, moves down, up, down, up, down, up, down, up, down, up, down, up, down. Get to the support, give us confirmation, moves up, down, up, down, up, down, up, down, up, down. Guys, market doesn't move as a straight line. It always gives us a confirmation of how it's going up. It's going up, down, up, down. It's more like staircase, you know. Right now, I can make a lot of examples, and you guys so that you guys can understand. But let's not even get into that. So now let's move on to the downtrend, right? So in a downtrend, the market obviously is giving us lower lows, lower highs, lower lows, lower highs, lower lows, right? Which would be lower lows, lower highs, lower lows, lower highs, lower lows, lower highs. Even though it's moving in an overall direction to the downside, the market still moves in one sequence way, which is what it will be giving us up, down, up, down, up, down, up, down, up, down, up, down, while printing the market downstream market structure, right? So it's very important for you guys to understand this so that you can be able to take advantage of these opportunities. So in that case, let me guys catch you in the next one. And if you'd like to join the free synthetic mentorship, click on the link down below. Remember that there's about 15 spots left. Catch you guys on the next one. Cheers.